Good morning, traders. Richard here, a quick Ichimoku cloud chart market review of the S&P 500 E-minis futures contract. I've got to continue this contract on here. In the last update, we were right here on our way to the bottom end of the cloud, and we were highlighting the bottom end of the cloud as the key downside target. Hit that target, sliced through it, and then we highlighted these further downside risk targets. We hit the 5033 cloud chart target, and then we had all these other downside targets close to key cloud chart support levels that the futures contract eventually hit. Now, when we were over here, we were highlighting this low there as well as the August low, so we took out those targets as well. Now, very interesting, the price action. Now we've got this kind of like a very stable, I'll call it a stabilizing candle, so to speak. Look at the long wicks on both sides, lots of support coming in here, still a little bit of lots of selling over there. Now the bottom in the cloud here is the new resistance zone. So the question now becomes are these previous lows going to be new resistance zones? Let's pop a line in there just to look at them. So that one down there roughly, is that going to be a new resistance zone? This one is also kind of a potential resistance zone. So it will be interesting to see if we're going to get a continuation of a relief rally beyond this low there as well as that one. So these are the two shorter term upside targets to look at on the weekly Ichimoku. Let's take a look at it on the daily. Let me just get the daily chart up there. Now, interesting enough, on the daily, watch out for, so far so good with this very strong rebound from support zones there, looking at the downside targets that we took out. And then we've also got these two upside resistance levels to watch out for. 5195, now the futures are fighting that resistance zone. The front end of the cloud there, that's also another key resistance zone to look out for, as well as the turning line and the standard line of the Ichimoku cloud. So these are the next levels to watch out for. That would be 538, 530, 5300 basically. That's the next resistance zone. That's the front end of the bottom end of the cloud. It's also a resistance zone. So we've got these upside resistance targets if this relief rally or rebound rally lasts up to these key resistance levels. Now, the thing to remember, by this time the sell-off became quite extended from the bottom end of the cloud. Similarly, that we look at when a market becomes too extended from the top end of the cloud, there's mean reversion back to the cloud. We get the same scenario to the downside. Yeah, we had an attempted to get back, but we didn't make the whole move. We just ran into trouble very closely at the top end cloud chart resistance level as well as the bottom end of the cloud there, so watch out for those. So this rally, if it's a relief rally, will start hitting resistance here at 5305, the bottom end of the front end of the cloud, and 5383. So these are the shorter term upside resistance target. Now, interestingly enough, this looks like we're doing a downward continuation pattern. This is the second wave down. So this was the first wave down, bit of a pullback, and the second wave down. It's almost like we had capitulation down here. There's somewhat what we've needed to see, a bit of panic selling there, large white candles to the downside, and then a very strong rebound. So this is the second wave down. So now we can get that little bit of a relief rally back up to resistance, and then we could possibly have the third wave down. Since we are below the cloud, that is bearish on the daily Ichimoku, so keep that in mind. We might be heading for a third wave down when we've completed this relief rally back up to the bottom end of the cloud chart resistance levels, as well as the standard line and the turning line. So that's the things to look out for on the daily. Stepping back a little bit, looking at the big picture, the weekly Ichimoku cloud, we can see where this support level came from. It's these highs there, as well as this cluster of cloud chart support, these old highs there became a new support test there. So it will be interesting to see if they're going to hold. What we can see now going forward is a potential for a relief rally like we've had here, back up to the bottom end of the cloud there. That would probably most likely be that turning line if we project that across. 5,500 will probably be the upside resistance target, but then back then there again, that would be the second another time to short sell the market when it hits the cloud chart resistance to the downside. We've only done one major wave down here on the weekly, so we could see a second one to there, and then a downward continuation pattern. So this move can clearly be projected down to this. If the economic conditions and the tariff trade war continues, then we're still going to be down here on a downward continuation pattern basis, as well as hitting that moving average there. But what we can see from here, let's just take a look at a Fibonacci retracement on this move. Let me use the... If we take this low here, look at this strong rally and the high there. The 23% retracement there was very much in line with the front-end cloud chart support zone. They're very close to the top end of the cloud, failed through that, and then we hit a 38% retracement there, very close to these lows, and then a 50% retracement there, and a very volatile sell-off to hit the 61.8 Fibonacci retracement zone. So that's kind of where we are right now. A 61.8% Fibonacci retracement is generally quite severe in an uptrend, so that means it might be more weakness. 23 to 38 to 50% retracement, that is kind of manageable, that you can still deal with in an uptrend. But as soon as we start looking at a 61.8% Fibonacci retracement, then it might be that the market might be rolling over further. So now this rally here could last up to the 5383 zone from a Fibonacci level, if we can manage to break through that cloud chart resistance. So that's the upside target on the weekly Ichimoku, and by that time we would have a catch-up of the standard line and the turning line to level out at those levels. Now if we just go back a little bit more and look at a Fibonacci retracement from this Q1 2020 low in the market, and that high, we can see we did eventually get to a 38% retracement, very close to a full 50%, but we didn't get to a 61.8% retracement. So the current retracement is quite severe, but what we can expect going forward is very much something similar to this, where we're stuck below the cloud. We're just about now at this point in time here, and the upside target would be the resistance of the cloud there. You can see there. So we still got a long way to go, that the futures will be under the bottom end of the cloud, which is ultimately bearish. We really need to be back above the top end of the cloud to be bullish. So we are looking for short to medium term swing trade opportunities from support levels to resistance levels, and we do expect this kind of sideways moving period going forward on the weekly S&P 500 futures contract. So keep an eye on for those Fibonacci levels to the upside for resistance and potential swing trades from the bottom end support zones. Now if we're going to take a look at the monthly Ichimoku cloud, we can see a nice upward continuation pattern. Move, pullback, move, pullback. Now it's going to be interesting to see if we're going to get a continuation of this kind of upward continuation movement. We're very close to the top end of the cloud of the monthly, which is quite significant. So there's still downside risk to this 4,000 zone, 4,600 and 4,700 on the monthly Ichimoku cloud. So that's the downside risk there. Very strong looking candle there, trying to regain the standard line for support there. But this correction was quite aggressive and very similar to this one, pullback, rally, pullback, and then a pullback to like a 50% correction, and in this case 61.8% correction. So overall not a particularly good pullback, a little bit deeper than the previous one. So there's still significant downside risk to this 4,600 700 zone, and if the support fails at the top end of the cloud, yeah, we're going all the way back down to 4,000. So that's the downside risk on the monthly Ichimoku. Okay. Now that rebound comes from the top end of the front end of the cloud. So that was quite a significant point to keep in mind for a potential rebound. But you can see we've only got like two down, significantly down quarters, and we do expect a third one down, and it could possibly test that low there at 4,435 there, very close to the standard line of the Ichimoku cloud. So keep an eye on that. That's the downside risk on the quarterly long-term view on the quarterly Ichimoku cloud. But let's go back to the weekly. Keep an eye on the resistance there. Are we going to break past that resistance? If this support here, this support zone holds for now, then the upside resistance targets is this 5,329 and then 5,383 upside resistance targets over the medium term. And if we're now going to look at the daily, You can see there, these are the upside resistance targets, the bottom end of the front end of the cloud, as well as 5305 and 5383 if we get a continuation of this strong rebound rally, looking at where we are. So we're rebounding from significant support on the quarterly, the monthly, and the weekly, and now there is upside potential back down to these resistance levels in the mini futures contract. Now, what you want to look out for on the 4-hour Ichimoku cloud. Now you can see very nicely how the long wicks at the bottom there gave us a little bit more confidence that there's a strong support here. Huge move, met resistance very close to the standard line on the 4-hour Ichimoku cloud. So that is a significant resistance zone to get past on the 4-hour Ichimoku. So we really want to be back above the top end of the cloud here. So that's the bullish zone. This is still bearish. So this is a relief rally and an overall bear market trend, because price action below the cloud is bearish. And now the upside resistance target, the first one is navigating is the bottom end of the front end of the cloud there, and then it's going to be the standard line of the Ichimoku cloud 5302, and then this top end of the cloud it'll have to break past. So there's a scenario that we could pull back like this to the turning line of the Ichimoku cloud, then make another rally attempt at the standard line of the Ichimoku cloud, hit the bottom end of the cloud resistance, and then come back to test for support at 5170. So that's kind of what we can expect going forward now, as long as this support zone holds. There's still some risk that we could retest the support zone, but watch out for this 5059 downside support target for a potential swing trade back up to the standard line of the Ichimoku cloud, and these are the upside resistance targets on the 4-hour Ichimoku. Just back to the daily. So far so good, strong rebound there. Resistance, as we've now mentioned, is the bottom end of the front end of the cloud, as well as the standard line and the turning line, that cluster of resistance. Until next time, happy cloud chart trading. Bye for now.